What's up, guys? Hope you guys are doing well. Ended the loss streak with the best trade I've ever hit, which is really cool. Only issue is I did take a loss prior to it, which could have been avoidable. I just re-entered. It was the same trade idea. I just re-entered. It was just the issue of mis-execution, which I'll walk through in this recap. Let me move this here. Okay, so let me just walk through exactly what I was thinking going into the day here. So going into the day, I was leaning bullish because this looked like a really clear buy model to all-time highs up here, and were just respecting bullish order flow. As you can see, we opened up this gap here with displacement above this high, tapped into it, then got bought back up to this high. So it just looked like a clear buy model. And what I wanted to see at open was essentially some type of manipulation lower before heading higher, which is exactly what happened, which is really amazing because that helps me with my confidence in reading price. So yeah, so what ended up happening at open? Let me mark out the opening range gap. So we had an opening range gap that was about 20 or so points, at 26 points, so not the biggest gap, which was a little concerning to me. Um, so yeah, that opened up there, and then at open, 9:30 is here. So we actually manipulated higher on the 1 minute. This was actually SMT up here. And we were retracing back into this 1 minute change in save delivery, tapped back into it, sold back off, respected. Actually, we barely disrespected this 1 minute bearish fair value gap. And then we closed up below this up close candle, which put in this OB. So this OB filled in 50% of the gap. So what I wanted to see from here was I wanted to see us just come out, sweep these relative equal lows, which look like this on the 15-minute, soup that, and then continue higher while respecting all these gaps here, which was a 1 hour gap. And then also just rebalancing to 50%. What ends up happening next is we do that exactly. So at this point, I'm like, bet, I want to get along. That would be amazing. We put in SMT here with ES. And then first presented fair value gap gets opened up right here. And that was the first entry I took. And it was stopped out about literally like a minute after the entry. Now, if I didn't trade inverses, like if that wasn't the model I got profitable with initially, then like I wouldn't really think anything of this loss. But why this was a loss was because the 30-second gap was the most obvious. So it's really nuanced thing when you're trading inverses that not every single inverse is the true inverse, if that makes sense. There's only one gap that's like holding price down, like one bearish gap that's holding price down. Like in this case, if the 1 minute first presented fair value gap was the only fair value gap on like the 1 minute, 30 second, 2 minute, 3 minute, 5 minute, then that's the only one I've taken. But since there was multiple, there's the 1 minute and the 30 second. If you're trading inverses, then you need to choose the most obvious in terms of like the one with the biggest point size to take, because it's just like I don't know why the market does it, but once that one inverses, that's when like price will actually take off. So you can see how this first gap, it was about 8 points, including the volume imbalance. So it was 8 points including the volume imbalance, instantly failed. If you look at the 30 second, it never got inversed here. And when it finally got inversed, you can see how price just took off. All right. So that was the one I re-entered on. I re-entered right here. Stop was below this candle body low because with the best inverses, price should not trade below the 50%. So this stop loss is appropriate for a trade like this, especially if we put in an order block right here. Price should really not trade below 50% of this inverse. So that was the entry. I went break even at this internal high. That was like 10 points in profit. That's typically a good spot to go break even with this model, is about 10 to 12 points in profit, obviously at like the first internal high. So went break even there, and the first scale was here at this internal high that was originally SMT, that was made to deliver price lower to take out these relatively low lows. So scaled half there, and then the next scale half was actually at the -1 on the standard deviation. It was somewhere around here. That doesn't seem right. I think this was it actually. Let me check my but I actually have it right here. So these are executions. So scale 1 was 119, scale 2 was 137, scale 2 was 151. Okay, yeah. So I kind of just scaled along the way here because there wasn't too many imbalances here to be to really scale out of from. And I was worried about the trailing drawdown on Apex, so that's why I kind of scaled out as we went. And then at this high right here, which basically was the objective for this session, I scaled out everything except for 1 micro, and I trailed my stop loss to this low here, which was an SMT. This SMT low here. And then we traded up above this down close candle, putting an order block here, and we also had this inverse here. And we displaced higher with displacement. Wait, yeah, we displaced higher above this high here. So this looked like a market structure shift. So if we're gonna stay in a buy model, this should hold. We should just come down, rebalance into it, and then continue higher. So what I ended up doing was I tried my stop a little bit more aggressively to the candle low of the first fair value gap, and I got stopped out in profit there with my last runner. So I thought my analysis today was basically on point. The only thing off was the execution, and that was just me being a little rusty with this model because recently I've just been trying to trade different types of models rather than sticking to one, which is not good because this model is the one that got me profitable in the first place. And if I had only traded this model up until now, I would have only taken this long, and I would have been up 2R on the day on all the accounts instead of just 1R. And yeah, that's really about it. So from here on out, just going to be focusing on only trading my model because I know this already that the most obvious gap is the one you should wait to inverse before taking an inverse fair value gap trade. Only issue was I haven't been taking this model enough, so as a reason, so I'm rusty on it, you know. Um, and yeah, so that's really about it. That was the move for today. So at open, this was the if you basically I want to just say this for journaling purposes, right? Um, one of my mentors basically said that you want to look at 9:30 to 11 as basically like its own candlestick. Obviously, there's not an hour and 30-minute long candlestick, but if there was an hour and 30-minute candlestick, you want to envision the morning session as that. So you want to envision basically where is the manipulation going to be for the session? So the wick low of that candlestick, and then where will the low or where will the opening price be, right? So at this, so if I just draw this out, the opening price here was at 930. 930. The wick low was this low, right? So if you're looking at like candle power of 3, this is the manipulation down here. If you're looking at this on a higher time frame, right? And then the candle is trading now here. And now the top of the candle, which is your distribution high, is all the way up here. So you want to basically be able to predict what this candle will look like and only trade that candle. So if you just look here, I know this is a little messy, but I hope you can see it, which is just the top of the wick, bottom of the wick. This is the candle body of basically the New York AM session, right? So Manipulation was down here where we went down lower to take out all these lows, right? We open down here, then we trade back up through here, and then we distribute to this high. And now we're retracing, and this is where the candle should be if you're looking at this on like a 90-minute chart, right? Matter of fact, let me see if I can actually do that. Yeah, this is basically how it would look like. So you want to predict basically how this 9:30 to 11 a.m. candle will look like and trade that, obviously aligning it with your narrative. Um, and that's really helped me with identifying like when price action will suck because the move has happened here. The power of three has already finished. So now we're probably going to be going back into accumulation here until we get, the next candle opening, which will be um, the next power of three, right? So that's it. So we trade lower, take out these lows, and we distribute. This is the entire low resistance move, 100 points to target. This next move will probably be high resistance because this was buy side of the curve. It's really smooth run. You don't really see buy side and sell side both being smooth. So I would expect this to be choppy. You can kind of see that it already is with this kind of zigzag movement. Whereas with this move here, you can see multiple like legs of smooth candles before the next stage of this accumulation and distribution, right? So if I didn't even take any of these trades, I would know that after this move has happened, I would be done for the day because this is all the gas. This move takes up all the gas in the tank that NQ has, and now we're just probably going to accumulate or maybe slow chop higher. You can still find trades here, but it's just going to be lower probability because the price action is not smooth. And yeah, that is my yap. So yeah, a pretty easy day in terms of bias. Just need to work on the execution a bit, getting back to what got me funded in the first place. Because if this was me like maybe a month ago when I was only taking inverses, I would know to only take that 30-second, right? So I'm definitely gonna be taking a mental note of that for future trades. This shouldn't happen again. Because in the past, when I was first learning this model, this would happen all the time, where I would take like the least obvious looking gap, or not the most obvious looking gap. That's not the biggest in terms of point size, and I get smoked. And today, that kind of just went over my head because I haven't traded this model in a minute. Like in this case, look at this. This is a live example right here. So this is a 5 point gap. So I want to see if on any other time frame there's anything bigger or more obvious in terms of point size, right? This is the only one, and we are technically still in a buy model. Price just came down here to suit this low, which was also SMT, right? So this is another trade idea that could be taken here. It looks like it's about to play out. Yeah. Um, I'm gonna tape read this for the rest of the session. And yeah, that was the trade recap for today. Hope you guys learned something. Hope you guys enjoyed the video, and I will see you in the next one.